Hi everyone, this is Hilary, your mortgage coach. Thank you for joining me today. I'm going to talk about a question that I've been asked by a few clients. So should you have a long amortization period or a shorter one? So in Canada, the maximum amortization at the moment, you could get a mortgage for either 25 years or 30 years, or you can even shorten the amortization. Why would people want to shorten the amortization? The main thing is they want to pay off their mortgage as fast as possible. And this is important, especially if peace of mind of having paid off your mortgage is important to you. The idea that you want to pay your mortgage so that you're debt free would be appealing to you. So how would I approach it? And what I'm explaining here is what I use and the thought process that I go through when I decide on the amortization period for my houses and for my investments. I'll give you an example. If you have a mortgage of $400,000 and you put a down payment of 5%, your mortgage at 3% would be around $1,870 for a 25-year amortized mortgage. The same mortgage at an amortization period of 20 years would be $2,180. And if you wanted to pay down the mortgage within 15 years, the mortgage would be $2,726. The main challenge with reducing the amortization is that the amount of payment that you require to come up with on a monthly basis increases significantly, and it can be a disadvantage to you in many ways, particularly as you look at the other calculations that I talked to you about as to how you qualify for a mortgage. A mortgage is considered a debt that is used in calculation when you are applying for other loans. The lower the amount that you require per month, the easier it would be for you to qualify for maybe a car loan or any other type of loan. Let's say, for example, if you want to buy a rental property, your payment obligation would be lower if your amortization period is longer. My advice is, especially for individuals who are still trying to pay off student debt, pay off car loans and all that, is to reduce your obligations as much as possible, and therefore a longer amortization would be better. That doesn't mean that you are not going to pay down your mortgage faster. What I would suggest is you take a longer amortization period, but you take the prepayment privileges that most lenders would provide. For example, my lender allows me to pay up to 20% of the principal at any given year. If you have a 20% of a $400,000 mortgage, is a lot of money. If you are able to prepay so often with a lump sum amount, that reduces your mortgage significantly. The other thing that you can do is maintain the longer amortization period, but increase your payment by maybe adding an extra payment every so often. That reduces your amortization too. The other thing that you could do is you could speed up your payment. Instead of paying your mortgage on a monthly basis, you can do an accelerated bi-weekly or a bi-weekly payment. When you do bi-weekly payment, what happens is you have an extra payment every year, and that reduces your term of the length of your mortgage. It's very important for you to understand what are the terms of your mortgage so that you can plan your finances accordingly, because you don't want to be put in a situation where you have to pay a very high mortgage for a long period of time, and when, let's say, for example, you lose your job or life happens, there are some things that happen in your life, you may not be able to afford to pay that mortgage at that time, and therefore you will be in default. Otherwise, if the amortization was longer, your payment was lower, you would probably have to pay the mortgage. I hope this has been of good information to you. Please contact us in case you need a mortgage, or if you need help on how to proceed in terms of restructuring your debt. Until next time, God bless you, and I hope you're on your way to purchasing your first house and securing shelter for your family. God bless. Bye.